What is going on, everybody, and welcome to another weekly update. Now, as you can see, the market has been red, something we haven't seen in a minute. There's a lot of different things, catalysts you could blame it on, but now, uh, considering Friday, the events that occurred on Friday, I think we can pinpoint exactly what is going on and why this market is tumbling out of control. You may say, well, Marcus, it's not really tumbling out of control because we did this parabolic move and haven't back tested anything. And that's also true. So technically, we should be back testing this, which we are doing. And we're doing it in quite a very fantastic way. I may add there. Yes, I am running out of words today. But nonetheless, the market's been selling off uh, a lot of different reasons. We started at the beginning of the week with the new variant, but being said, the variant I think was only part of it. Yes, the fear came in. We had the fear. We took the dive. Then we had over the weekend. Then we took another dive, and then we started having this waterfalling cascade effect all the way since that point. So it kind of essentially was the tipping point. So the new variant was a tipping point, but now we're finding out that the variant is essentially all over the US already. I'm recording this on a Friday after market close. So we've seen it in New York, we've seen it in California, Hawaii. It's popping up all over the place. It's nothing new. The White House press secretary has already talked about this. Biden's talked about it 7 different times. Biden also came out and talked about the jobs report. Not great. Inflation is basically beating wages. So being said, this leads to a lot of other issues. Yes, people are going back to work more, but the issue is that the wages aren't matching the rate of inflation. And this was concerning as Powell also changed his tune as far as everything being transitory and are essentially saying now that things need to hurry up and possibly expedite as far as tapering. Tapering of assets have started, but it's very minute, and the tapering will end further on towards the later part of next year. Again, that's if nothing happens with this new variant or there's some other variant that locks us down or something, hit supply chain. That's a strong policy. That kind of thing can happen at any moment. You've had ships get stuck in the canal, and then our supply chain has been completely messed up. So there's a lot of different things that can come into play there. There's a lot of black swans. But with everything being said, everything being considered, there's more news about the variant coming out today. It didn't affect the market. The market is coming numb to this. The market doesn't care anymore about this. What is ultimately underlying issue that is going forward is inflation in the rate raises. What is going to happen with rate raises? Because people, even though people are going back to work, and again they're making hourly wage, the growth for the economy is still very slow in the U.S., and that is not a good sign. And then considering, again, the rate of inflation is exceeding the growth, and you're going to have rate raises possibly on the horizon being moved up because trying to stop the rate of inflation. This could lead to a major correction. And something you have to look at this past year, and something I've talked about throughout this whole year, is that a lot of different things, we thought it was transitory. I think at one point it was transitory because we weren't really sure because the supply chain issues was causing the inflation. Now it's time to play catch up. So being said, if they start increasing rate raises, which is something they're going to be talking about on the 14th and 15th, which is a major event that's not this week, but it's the following week. So you have to understand these moves are coming essentially because of that meeting, that FOMC meeting. Are they going to start moving up the rate raises? And if so, that is ultimately going to be the tall tale sign of what happens. And they talked about Powell puts all the time. If you're in any kind of stock market stuff, know who Powell is. If you're investing or anything like that in the economy, you know about Powell, Federal Reserve. You heard about all this stuff, but nonetheless, Powell, he essentially take the markets by raising rates and continue to raise rates for a while, and then decided to finally hit the brakes, and the market essentially came crashing down. Being said, this is a strong possibility that this could happen now. This is, I think, what the market is worried about, and what the market has been preparing for is what is going to happen on the 15th. Essentially, the 15th is when we're going to have the closing argument, essentially the closing statement from Powell, and that is when you're going to get the information. That is when the market will have its idea of where essentially the economy is heading. Are we heading to moving up the rate raises? Because if that's so, we're correcting now, but we're going to correct even more. We have to look back at this past year and realize we've barely corrected. I don't even think we corrected over 6% this year at all. We had two bigger dips, and they were not 6%. They were pretty close. I think one of them was actually pretty close to 7. The one back in March, I think, was pretty close to 7% correction. And normally a correction is anywhere between around 10 to 15% in a normal year. Given this year, yes, I would say it would be very diluted. But moving forward, it's not saying I'm still not bullish. I'm still bullish, but we have to understand that this part, something else that I've been talking about all year, is that there needs to be some kind of correction. A correction will happen before you can continue on. You got to retest old levels of resistance to build up a bigger bull run moving forward, going into the next quarterly earnings, which is roughly about a little over a month away. Now just closing up some earnings here, and then that's we're gonna go roll into the next ones. And for earnings, we got ChargePoint, GME, Chewy, and Cost on Thursday. Again, events this week. There's nothing really big. There's a lot of data. None of the data I think really matters. What really matters is core inflation, CPI. That comes out on Friday, so that's going to help lead us into the following week, which is the FOMC meeting Tuesday and Wednesday. Again, on that point, we'll have Powell on Wednesday, 2 p.m. or 2:30 Eastern Standard Time. He'll be coming out and addressing everybody with a statement on their actions. And that is ultimately the big event we are waiting for. And so I expect a lot more selling. We've hit, as far as my watch list, I got Tesla, ASML for chips, Affirm. I got some oil on here. And then I got e-commerce, the Amazon and Shop. But being said, we're correcting. We're at a really crucial level. We've really kind of held this support. And so my thing is, I think we're going to break this 4,500 support come next week. And then from that point, I think we're going to probably come down pretty far. We can still come possibly way down to the 4,300. Maybe not that low. We'll probably get around, say probably around the 4,400 mark. We can still come down. So we can still come down quite a bit. In my opinion, we'll still be bullish. We'll still have that run possibly. Again, even if he says we're going to have rate raises, I think we're going to have a dramatic. I think that this move is already kind of getting priced in right now. That's what we're seeing, the dramatic selling for no apparent reason. Today, we didn't really have a reason to be selling, but yet we sold really hard. And the only thing that we have left is the meeting. We have the debt ceiling too, which is being pushed off till possibly February. And so that's going to come around that's going to be essentially being moved, essentially judging inflation, judging rates and all that stuff. So that meeting, I think, is going to be kicked down the road every couple months until they figure out what is going on with the rate raises. So being said, we need to watch this key level, the 4,500 mark. I think we do break this next week. I think we are coming down a little bit further. I think we got another 100 points on the SPX to come down. Again, that 4,400 I think is a strong possibility between now and the 14th and 15th. Then from that point, that move of rate raises is essentially put into the market, right? It's already been engaged for the market. So then from that point, I think we can start making our run back to all-time highs, and then possibly another correction, depending on what happens with the rate raises and when they plan on doing that. They said, I think it would probably be early spring-ish. Around March is normally when we correct. So I would think somewhere around there. Again, we're going to have a FOMC meeting every month, so we'll know essentially where they stand every month. So this meeting is definitely going, if they start talking about rate raises in this one, it's definitely going to be a hot topic every time it comes up. So every once a month, we're going to get some kind of massive volatility until they do make that decision. So being said, where does that leave everything else? So that leaves Bitcoin. Bitcoin is right, I think, right at a good spot, but it has to hold essentially this 50K mark for it. I think it's still come down pretty low, probably hitting a high 40K and still be okay, just as long as that daily candle does not close below the 50K mark. I think we'll be okay. And especially with inflation and everything, I think inflation is only going to push, I think, Bitcoin higher. I think it's going to be one of the biggest drivers it has been to this point, and I think it's going to continue to be the next coming months. So being said, right now it's no reason for concern. I don't think we're going to crash. We're just pricing in that rate raise, and that rate raise is, if there is going to be a rate raise, it would make a dramatic change in the market, and we're already starting to see again the big dip downs because of that. Now, Tesla is my first one I got on watch because this is going to be, it really needs to hold essentially this 1K mark. If it does break below that, you got a big gap down to 900 almost from that point. Yes, there's some, got some relief at 950, but that make a lower low if it does hit that. And then I think it's going to come down once it does break that 1K mark. It's coming down quite fast. And you can possibly come all the way back down to the 200s. You're still looking all the way down to the 800 mark is even possible. But I don't want to push that far too soon. I don't want anybody to panic. You have to just understand that these moves are being priced in because they're expecting a rate raise to come early. That is what's getting priced in. That's why stuff is just selling for no reason, because there is reason. You just have to kind of foreshadow what exactly is going on with the Fed and their moves. You're not going to know everything, but especially when you come on a day when the only news you're getting is the variant stuff, and it's not affecting the market. So the variant stuff, I think, is wearing off unless, again, if lockdowns come up, then it will affect the market. Until that point, I don't think it's going to have an effect on the market. Right now, it's all about the rate raises and inflation. Every headline that comes out is affecting the market. So Tesla is definitely on watch. I want to get this one, especially if it does hold this 1K mark, and we start pushing back up. Again, even though my thesis is this going to the week, you have to also understand that it can change. There might be a piece of news that comes out over the weekend, piece of news we get on Monday or on Wednesday or on Thursday, and realize that it could change everything dramatically. So just be aware that even though every week you should come into it with some kind of thought and idea of your plan of attack, and realize that you have to be very adjustable on the spot when it comes to the market, because it does change daily and very quickly. ASML, I really like this, especially for the semis and the chips, they essentially deal with the equipment side of it. Being said, I want to see if this actually comes and tries to retest the 200. We got rejected, and now it's starting to come down. So this week I want to see if we start accelerating to the downside, which I don't think we will. We've been kind of like pumping and just dumping, which may be something I think we're going to continue to see next week. If we do make it down to the 200, this 200 EMA on the daily, essentially that $717 mark. I want to get a position in this before we start heading back up. So again, one of the ones I definitely want to watch for the upcoming month and going into earnings. These guys, I think, are going to crush it going in earnings. Any kind of chips, right? If when you're talking about Gold Rush, you talk about the picks and the shovels, or the people that made the most money. And this is the pick and the shovel. So I definitely want to keep this one on watch. Affirm is another one that's already. I'm kind of looking at ones that have already kind of are hitting support. Even so, a lot of the fangs are hitting support. To be honest. Affirm is one of them that just hit the 200. I want to see if it floats around this 107 mark. The nice thing about this holding here is I want to see if it just grinds against this this 200 daily at that 105 mark and try to build a position here, and then wait for the breakout. I figure about a week, we'll probably get some ups and downs in here, and then finally get a breakout up. So I want to watch Affirm for that. Moving forward, OIH is interesting. Everything going on with oil right now. It's also in the same spot. You are essentially holding this 174 mark. We did break the wedge and retesting. So try to get in essentially right here at the 178 mark. And then going to watch this kind of grind up. I think with everything going on, this might be a smoother pushback up since it's already hitting support. You got a couple of them that are doing that. So I want to keep some oil on watch. Amazon is the other one I have. It was also sitting on a 200 today as well. This is the daily supports from the EMAs. It's not saying it can't go lower. It did get a big pop right off of that. Normally, I like to capture these first bounces off these dailies, but I think with everything going on, we're going to actually break back below this. How we did this earlier. So I'm looking for Amazon to actually break back below this. Looking to see if we could possibly, I don't know if we're going to hit the 3,200 mark again. Possibly the 3298 mark could be a strong possibility, and see if we hold that. But one of them I definitely want to watch. I want to see how this 200 holds. So we're looking again at that 3340 mark. We want it to hold here, which is the 200 moving day average, and see if it does hold that. Again, going into the Christmas rally, you have to understand the Christmas rally doesn't really start till around Christmas. Even though it is December, everybody thinks, oh, it's December, it's Christmas rally. No, it doesn't actually start. You normally get volatility a lot in the beginning of the month, or low volume. You don't really get a lot of big moves. Bigger moves come till like right around Christmas, because you start getting low volume the last 2 weeks of the month. And then you get that massive rush in January, which essentially picks everything back up. So they said I also have Shop on here. One thing I didn't include on here is Google, but that's one thing I want to watch. Same thing, just like Amazon bounced right off the 200. I want to actually keep an eye on this and see if we can get down to the 1300 would be great for Shop. So we would have to break the 200. So we're kind of watching this 200 level essentially at the 1376 mark is one to keep an eye on. You can attempt to get a position in here as long as you keep the stop tight. But if it does break there, that's the next level I'm looking at, is essentially that 1300 mark for another entry. And then Google is one I didn't have listed, but I wanted to actually look at this because it does crush earnings. It's still really high. So I'm looking for hopefully, Google is not one to really come and be flirting with the 200 just because it's a solid company. And it really doesn't rely on anything because it has the ads. So being said, I think we'd be really pressed to trying to hit 2730. I think it's a possibility. If the whole market goes, I think it could come down that low. But again, this is why I also do daily updates to try to capture these, and why I also didn't list this yet, because it's still got a lot of room to come down, if it even comes down that far. But again, going into next earnings, yes, we're still a month away. You're trying to look for setups. So I'm trying to look this week essentially for some setups, and kind of what I'm looking at, again, because I don't like to give out watch lists during the week when a lot of things aren't in a position to essentially enter, because you want to wait for some stuff to play out, like these rate raises. So once that plays out a little bit more and we get little bit more understanding where the Fed is standing on rate raises, then we can make our moves from that point. But if you have made it for this far, go ahead and hit the like button. Until next time, I'll see you guys later.